What's going on, YouTubes? It's time for a recap. Happy Friday, as it was today, as we planned for some fantastic shorts. As we are showing off here on the X, we had a perfect sentiment over under at 526.27 for me, right around that area. Pre-market high-low, we'll get into it. We had target 1, big old 524.26, target 2, big old 521.40. Those are my two biggest targets. Like always, if we put a target 3 out there, it's pretty much in dreamland. I don't always expect to hit even target 2. 3 is always one of those fallacies. And we have the sentiment markers here where long and short persist. We picked over under the weekly for today if it wanted to reverse to the long side, as we were all short all morning and we got her. Best case scenario short would have been the bottom of the golden pocket, but hey, let's get into it. So as we jump into today, like we said, the gold levels are always yesterday's lows highs, okay? So my gold Fibonacci here, high-low yesterday, created this beautiful golden pocket in the gold. That is the Fibonacci between the 61.8 and 38.20, right? So the weekly is just last week's high-low, always in the teal color for us, so that will come into the explanation in a little bit. So the only things that I actually used today, because Friday we take very slow, the daily Fibonacci, the weekly, a little bit of that VWAP, and today I use the pre-market high-low range, okay? And the pre-market high-low Fibonacci range is something that we use a lot if we don't have a whole lot of pre-market algos or crazy data to adjust to, right? So as we stretch this out a little bit, let's turn that pre-market high-low into neon green so it's just a little easier to comprehend, right? So that was just pre-high to pre-low neon green, okay? I know it gets a little busy, but what we do is we overlap these levels, right? And we find tons of confluence points. So the 50 fib of yesterday in the gold and the green neon pre-market high-low 100 creates a channel, right? We call these overlapping metrics. I like to overlap these and create channels with Fibonacci. We teach a lot of that in our classes here, right? And as we get into the golden pocket, let's delete this. You can kind of see where that 50 is. That was the over-under, okay? So really big over-under at the 50 fib of the pre-market golden pocket high-low. So let me just mark that. And we're going to keep those on, and that's it. We're just going to keep that as an over-under, okay? So the pre-market high-low golden pocket 50 right here at 526.66. That was a really big over-under for us, and that's how I picked our shorts, right? So let's back up a little bit here in pre-market and kind of look at the structure that we had seen coming, right? So pre-market open, I got an automatic code that puts in this beautiful little purple line here at 525.70. That's the first tick of pre-market, and I really like to know where that is for over-unders as well. And as we get into the open and push, we set a pre-market high, 532.56, and then a low, right? 520.78. So this little white line developed off this high-low range, played out very clean to the downside. Now, the weekly was also a big part of that, 528.85. We're going to talk about that confirmation reversal here in a second. Just keep that in mind. The pre-market high-low is interesting because of the pre-market structure, okay? So the pre-market high-low that we fibbed out the neon green and got our 50 level also gave us some good patterns, right? So the pre-market open, put in that high, lower low. Okay, we have one high, one low. Pushes up to the lower high, comes down, right? Thus setting trend, and then the lower high at the weekly. So we were shorting this one right here. Why is that? Well, in ES, right? You can trade that obviously, everything but 1 hour, 4 p.m. to 5 p.m. So we always trade that futures into the pre-market. We see in SPY kind of break up right here over the GP. Now remember, this is yesterday's 50, so support in pre-market here, very viable. Comes in, hits it, breaks to the upside. But what did it break over? Well, first the 200 SMA 5-minute, which is the peach dash line, then the VWAP. And then the pre-market ended up setting in a lower high from the initial high. That trend pattern told me that, hey, if we set a lower high, right, from the pre-market high, the structure has a chance to come back down and test the 5-minute 200 SMA because we broke over that right here, right? Snapped up, back test. We do a lot of confirmation trading here, right? And if you look at our Saturday classes, if you want to tune in tomorrow, we teach them every Saturday for free here on YouTube, noon Central Time. I'll be going over entries tomorrow. So we've seen this beautiful confirmation back test, which we just got done teaching last week, for a short. We had this breakdown of the weekly, lower high, little micro head and shoulder there. And then, of course, needed a back test of a couple different moving averages here. And, of course, the 200 was the big one. Now, moving into the secondary move, we figured PPI data was going to pop it up. So in my chat, if I go through the Discord here, which I don't have up your SL on that one, we said it was going to do a scam pop up, and then we were going to sell back down to the golden pocket, because most likely move here is the pre-market likes to run up closer to open, and then it usually backdrops the pre or the golden pocket from pre, right? Because pre is not open. We have live over here, right? Pre over here. So when the candle opens up for the day, if we're watching pre very close, this is why we trade with pre data, we can understand that we have a chance to magnet back to the golden pocket, which is my biggest zone always, right? So when we were planning the short here off the weekly fib, off the pattern, off the PPI pop structure break low, and if you don't see that structure break here, this is what we were shorting here. It's a structure break. This lower high came down, PPI pushed, got another lower high, and then snapped. But this structure break right here popped to a lower high to allow us to come down. That's why we were shorting all pre-market, running this down because the golden pocket needed to be tagged. Same thing happens if we were on the bottom side. So if we were to happen to be coming from yesterday's lows like this and going to the long of the golden pocket, same exact thing. I look for that return. If you're used to this channel now and tuning in, we look for the prior day's golden pocket all the time, right? So with that being said, those are the key points. We open up, we got that PPI structure break lower high, magneted down. There's your live tag of the 50. Now, those targets that we had put on, I put on T1 right here at the 61.8, T2 at the 50, and then if we would have got that extension and flew way down here at a panic, great. T3 best case would have been 38.20. We didn't quite get that. Why is that? Well, QQQ and SPY tend to rubber band and front run. This is why you got to watch both indices, or at least why I watch them, are both ETFs, because when we come into QQQ and SPY here, one, SPY hit that perfect 50, but never came to the bottom of the golden pocket, 518.54. Qs, however, this was front running. What does that mean? That means Qs was acting first, SPY followed. How do we tell? Well, look at the golden pocket. Pre-market high here in Qs ran down, slammed into its golden pocket, lower high, slammed into the 50. Okay? Right? That was during pre-market. SPY, however, shied the 618. Q hit, shied the 50 in pre-market. This is the biggest thing you hear me say all the time. First tag and shies, right? Qs went farther, hit all of its GPs, even on that big wash, cleared the 61.8. SPY did not. It got held up right here by the 50. But more importantly, how did I utilize QQQ and SPY? Well, I seen Q hit, but SPY gave me a really interesting read, because if you zoom into yesterday's high-low Fibonacci golden pockets of 61.8 and 50, notice the price action shied on both attempts in pre-market hitting that golden pocket, right? On the new set. We obviously hit them back here, but it doesn't matter. We're coming back down for that confirmation. We actually missed it, washed it, missed it, washed into it, okay? Those are very big contact points of price action coming back to a level when something is shied. Shied means price action gets super close and then doesn't actually hit the level. Comes up, wipes it out, gets super close. Look real close there. Level's not actually tagged on the gold level. You can see that, right? Yeah, not tagged. So I had a sneaking suspicion that we were coming back down, and when I seen the PPI data, which we called ahead of time, said PPI scam up, we found that weekly all the way down, hit both targets. Now let's talk about reversals and confirmations, because I told my crew here, said best case scenario, we got a beautiful short unless, trend is defined otherwise, right? And we have a push high on the live trading. We hit the weekly, shorted that sucker right down to the 50, nailed it. Back up, that's that pre-market high-low 50. Nailed that, came down. What do we notice in structure and pattern? Well, we didn't hit a fresh low this time, B. So when we came in, I was like, they're like, Brandon, what are we doing on the fresh lows? It's all pattern, guys. Check this out. Comes up to the weekly, lower low, pushes up, lower high. That's why I said it's a beautiful short coming down to the next GP unless something stops it. There is your higher low. Right away, your pattern recognition needs to go off and say, okay, we got our set low, we got our first high, we got our lower low, we got our lower high. We did not get our next sequence lower low. Come on, brain. Time to watch stop outs. We use VWAP, just the regular old VWAP with the deviation markers. This purple is the VWAP, +2 in the orange, -2, which is deviations away. So if the regular VWAP is here, the +2 deviation and -2 deviation are in orange and blue. Now, when that came in and we hit that higher low, no more lower lows, it popped up and it put in just the perfect flag. You could never assume that was going to drop there with that higher low setup flag, okay? Pattern recognition was broke to that long side. 2, we recovered VWAP, which is huge. 3, 10 SMA on trend. Oh, itchy nose. 10 SMA is an algorithmic program that I like to run. Not a program, I should say. It's a program that the stock market likes to run, not me. Where when something breaks over, right, the 10 SMA, the first tag of confirmation is usually continuation. So not only did you pop here for the redo of the trend, right? You had VWAP support, 10 SMA, 200, yesterday's close, all of this stuff stacking as support with a perfect pattern flag. Okay, we can definitely start looking absolutely no more shorts because the trend is telling us, right? What else do we have here? One of my favorite patterns. That was a really crazy leg. Okay. Big W, okay? And when a big W pattern is formed, we look for the breakout and the back test. Look at this crazy algo to the center of the W. So again, this would have told you. We also said the weekly, like in the beginning of the video here, but look at the back test and confirmation again. So all of a sudden, you got to be wishy-washy here. You got to understand all the bullish metrics we just talked about to get that price action up. We finally hit pre-market high. First tag. So let me stop you right there. Look what happened the first tag of the pre-market. Abrupt opposite move. First tag of the pre-market high. Abrupt opposite move. Algos understand first tags. Okay, just had to yell at you guys. As the weekly comes in, breaks over the weekly, what is confirmation for us? We are confirmation traders. So it broke over a level, aka the weekly we've been staring at. And what did it do? Back tested that exact level. Price action broke through the teal weekly, back tested. That is confirmation of continuation, right? And where did it go? Right to the next weekly fib, because fibs are king. Okay, that's what I would have did for that last play there. So we had a beautiful short morning in our chat. We called it all the way from the PPI short. We called this long. We called this short. And then we gave it the short long plan for sentiment over under that pre-market 50. If you start to see action really get over that, go flop. That's what we said, flop bias. That's what that picture was earlier for the sentiment. We said over or under because, again, markets always change. We need to be able to adjust on the fly. That is our job as day traders. If you want to see me do this stuff live and come hang out and chat, I stream every single day in our private Discord. Link is in the first thing of the description at the bottom. If you want to leave a comment, like, and subscribe, tomorrow I am teaching a class at noon Central, and you have a chance to win $50 if you commented on any video this week, Monday through today. So if you have not, make sure you're subscribed. Go drop a comment, and we give away $50 for a Top Step account, 50K account, right? Every single week. Or take your wife out to dinner. I don't care. It's $50 for you. Come join us on the live stream, win $50. All right. Thanks for tuning in on the YouTube recap, guys. If you want me to cover anything or have any questions, I have no problem doing so. Drop a comment what you want to learn. Take care, guys. Trade safe. Enjoy the weekend.